Okay, good afternoon, guys. Welcome to another live trading clinic. My name's Steve Ruffley. So today, really going to focus on the Bank of England. I'm not sure if it's going to be, trading-wise, the most exciting of sessions, unfortunately, but we just never know. I think the Bank of England, for me, is a bit of a tricky one. Somebody, has to make the first move on rates, and I think for me it has to be the UK. The European Union's still not stable enough. They're really not the kind of, type of. There's not the type of government that will just lead. Okay, so they have to follow. They're basically sheep. So basically, the ECB have followed what the Fed's done for some considerable time. The Bank of England again controls its own monetary policy, and I don't think it'll be a political thing. I don't think it'll be an economic thing. I think the thing that will make interest rates rise and try and curb inflation will be just people. People will be, they'll vote with their feet almost. They'll be sick and tired of seeing, their savings gain no interest. They're sick and tired of seeing, the pound in the pocket being eroded and the quality of life going down. There's only so long people in the UK have put up with that. So the only way I know of controlling inflation is putting up interest rates. So for them kind of basic arguments, I really do believe that the Bank of England will be first to move on rates. So interesting. We'll see what he said today. Again, today will be about trying to read between the lines. We don't expect, obviously, the interest rates won't change today. And there'll be, the standard rhetoric that comes afterwards. And that's what we have to listen to. Because you've seen the shifts in the moves in the markets recently. Again, it all depends on Friday's really, really important non-farm payroll as to whether the Fed are going to start the tapering of quantitative easing, in January or March of next year. And you can see there were some brutal moves last night in the S&P. I nearly got caught out a couple of times. Just such aggressive sell-offs, and the market's really aggressively moving down. And that's all basically because people are profit taking, and ADP was better than expected. So if non-farm payrolls is significantly stronger than the analyst expectations on Friday, then it looks that the quantitative easing will certainly be in play early next year. And the stronger the figure, the more likely it'll be earlier on in the year. And the stock markets, you've seen yourself, the sell-off of the DAX and the S&P over the last few days. If we see, a much, much better than expected non-farm payroll, we could see the S&P close down, on the day, maybe 2%. It's that big. The figure tomorrow is the most important figure of the year, probably of the last 3 years. So massively important that we pay attention to tomorrow's non-farm payroll. Anyway, so live trading clinic. Before I start the risk warning, remember that spread betting, 50 trading will carry a high level of risk capital, resulting in losses that exceed your initial deposit. It might be suitable for everyone, so please ensure you're following the risk involved. The information provided here under no circumstances considered an offer or solicitation to invest. Nothing herein should be construed as investment advice. The information provided is believed accurate the date it is produced. Education only. Content of the webinar is personal opinion of the moderator, not Intro.com. Content does not constitute financial investment or tax advice. Intro.com is not accept any liability for content and comments during the session. So what we're going to go over, live charting analysis. I'll go through, some UK focused products, multiple time frame trading. Again, that's just the way I trade. Higher time frames, viewed on lowers. Fundamental analysis. Well, plenty of that. Again, the couple of minutes I've just rattled off, what I expect to happen in 2015 and why. Real money trades. I've got my account open as always. Same thing, go double trade. And again, Q&A, guys. These things are for you. So if there's any questions you want to ask me, be it fundamental or technical, type them into the chat window. Any product you want me to go through in detail from the technical side, just put it on the chat window and we can go through it. Again, these sessions are just as much for you, as they are for me. I like to, tell you my opinions, and I like to, back it up with my fundamental and technical analysis. But I don't know what you guys are focusing on. So any particular currency pairs you're struggling with, let me know. We'll just go through some of the basics of what the markets are doing right now. We've seen the pound really sell off against the dollar for the last couple of hours. So we're trading down as low as 1.63383. So the next logical point you guess the market is going to look to test back to the moving average and the resistance points up here. So again, if we see, depending on what we see today and what the comments that are made, we could see the market recover to 3748. Maybe get to these highs up here. Again, I've got some nice Fibonacci levels on. Again, it's just one of the ways I trade. I mean, again, the 50% retracement level of this move here becomes a key point in the market, where it's a key decision point. So once we, close below that 50%, then we've got our targets. We've got our 100% retracement, our 161 retracement, and 261. I mean, look, that was the perfect place to buy back the pound against the dollar. We saw some great moves back up. So, these are the basic lessons and the basic kind of technical studies that, we all have to be using on our charts. I mean, again, the markets behave sometimes in an irrational manner, but the majority of time, that's the extremes of the market where they're not acting, particularly technically rationally. So these are where you have to be involved in the market. The extremes up here, the 100% where the move starts, yeah. And then again, what you have to realize is that once any kind of study, like any support or resistance line, any trend line, any Fibonacci line has worked once, it will work in the future. Okay, so when the market again looks to natural places to test, this is hours and hours and hours of data here, but the market is going to test back to these Fibonacci levels here, so 1,636, and if it breaks above that, it ties in with what the markets are telling you. It ties in with the Bollinger Band. It ties in with everything else. So 16394. I think it's going to be difficult. I mean, the pound versus the dollar is, cable is the most difficult product forex-wise for me to trade, because I have so many conflicting kind of fundamental views. As we know, once quantitative easing, starts to be tapered, then the dollar's going to appreciate against every currency. It's as simple as that. So we're going to see massive dollar strength. But it's trying to figure out where that real strength is going to come from. Markets you might want to focus on is the dollar versus the Swiss. Again, the Swiss seen as a safe haven and been very, very strong like gold. So I would certainly say that the dollar versus the Swiss is one we should look at. Maybe the dollar versus the Aussie dollar. Again, I would really stay away from trading the pound against the dollar, because, as I said, I believe that the UK will move first on interest rates, and it's quite a strong economy. So I just don't really see the value of trading the pound against the dollar for myself, because it's too close. It's too close fundamentally, it's too close technically, and it's just too difficult. For me, it's like a 50-50 bet. I want to put the odds more in my favour and trade, the dollar or the pound against other currencies, especially the euro, where I think I've got more of an edge. So realistically, we're moving in this nice range. It looks like the pound may have bottomed out. So we're looking for places for the market to rise to. It's these fib levels up here. And again, depending on what we see of the Bank of England today, could see the pound strengthen to 1.64-150. That'd be a good place to buy to. Me personally, I'd be selling up here. But again, that's just the way I trade. So really, what we get from that is stay away from the pound, stay away from cable, basically. It's too hard to trade. So getting back to what's more up my street is the indices. So here we have the FTSE. We've seen, as again, some very strong selling moves, over the last kind of couple of days. We've lost over 2,000 points in the FTSE. And again, it all starts from the fib. So again, the fib here, back at 6678. That's where the market really tops out. It never looks back. Okay, we make one final stab, an attempt on the hourlies to get above the 50. Then bang, the 100% is the target. 161. I mean, you could just sell these levels. The market's trending down, and I can't really make it any simpler than that. Can't really. These become instead of points of attraction to bounce, the points of attraction to break, and that's understanding that again what the fundamentals are driving the market, and that's really the quantitative easing is going to be tapered, and that means the free money's out the stock market. So people take profit and people sell. It's just that simple. So where's the FTSE going to stop? Got some good levels down here. If we do break, these lows here at 6464, then definitely 6364 and 6354 are big daily targets for me. Below that, a daily and weekly target of 6287. So conceivably, after the non-farm payroll tomorrow, the market could easily be trading down here, down these levels, could easily. So tomorrow could see literally, stock market Armageddon if we see a strongly expected non-farm payroll. So again, what you're looking to do is, if the market gets as high, certainly as here, as the fib level, then these are resistance. You know, while the markets are trending down, then you're looking to sell all these points. So again, all these levels on the downside, instead of bounces, you know, should really be breaks. And what you want to be looking for is these to act as resistance, not support. So again, some clear levels of attract on the downside of the FTSE. Again, we're holding below the moving average, just something very fundamental to look at, you know, very basic to trading. So if we push above the moving average on the hourlies, but don't close above it, again, we just see like the long kind of tails, the long kind of wick bodies, then maybe you want to start selling, you know, things like that, or selling when we close back inside the upper Bollinger Band if we're going to range. And then really it's just looking for your downside levels to be your exit. So FTSE, again, looks like it's down to me. It looks like it's not looking weak. So again, you know, don't be expecting, don't see some big pullbacks. It's not weak. It's just natural. You know, it's natural that it's following what's happening in the US. And as I said, you know, last night, some very aggressive moves late on in the S&P. And, you know, it's very difficult to hold your commitment and, you know, keep buying them low. So really, don't do that. You know, when the markets are trending heavily downwards and breaking levels of support, then you want to be shorting into this, because it's a very difficult and dangerous game to continually buy the lows and average in at the bottom. Even myself as an experienced trader, you know, I was holding on the back of, you know, 35 S&P at one point. You know, that's a lot. And when it's moving that quickly, but, you know, that's experience. You know, we got out, you know, we didn't make a great deal of money, but, it was certainly for me too high a risk reward strategy. I don't want to be doing that too often, because it's just not the way I trade. So gold, one thing to keep an eye on as well. Again, with the quantitative easing, when that comes into the markets, you could do one or two things. You know, you just have to understand the bigger picture with gold. A lot of gold now, the speculation money's out. You know, okay, we're trading $600 lower. So a lot of the speculation, a lot of the hedge funds have collapsed, have gone. So there isn't that volatility and volume anymore to keep gold, you know, on that uptrend. So we're clearly have been in a downtrend for some time. So, you know, let's look at what's happening on the monthly charts, you know, again. So when we talked about these big fib moves, and we're below the 50% now. So that isn't good for the bullish price of gold. You know, 1, 2, 3, 4 selling months. So realistically, once we break these lows at 1180, then we're getting down to $1,000. You know, as I said, I've been quoted in the FT as saying by 2015 gold will be $1,000. It'll probably do that, you know, well in advance. You know, well in advance. It'll probably do it, you know, I would say in the next 3 months. So we're only kind of, you know, we're not that far away at all in realistic terms. And I was saying that up here, you know, when we were trading at 1,500 and 1,600. So, you know, sometimes, you know, I get it right. But, you know, it's about understanding that you're on the right kind of path now, and then picking out how you trade from that. So really, you know, it's looking to break the lows here of 1180, and then gold's going to go into free fall. So on a weekly chart, you know, you can see how that's moving. You know, again, the moving average is acting, you know, as good resistance now. So we're on the lows of the weekly Bollinger Bands. Onto your dailies, telling you the same picture. So maybe gold recovers back to, you know, maybe, you know, 1261. Back towards moving average, and then drops off. So you've got to think what the market will do before it actually does it. Okay, so you're not just going to be able to sell gold now and take no risk on. Okay, because gold could easily go up another, you know, a couple of hundred ticks before it drops 1,000. So that's what you have to understand. So again, that's the monthly, weekly, daily view. I tend to just look at it on the hourlies, because then I can pick out smaller opportunities. So again, the fib, you know, again, guys, I can't tell you how important it is. The fib's drawn back here. So 1 opportunity to sell, 2 opportunities to sell, 3 opportunities to sell. Doesn't get a lot more easy than that, does it? So realistically, we're below the 423 now. So that's going to act as resistance. So generally, I'd sell here, and then you got your support down here, support down here. So that'd be gold. Okay. So got a few people coming through. How about the euro dollar today? Absolutely. Let's go through the euro dollar now. No, that's not how we do it. That's how we do it. Euro dollar. Template on that. What's that? This? Right. Okay. 1 second, guys. Right. Okay. That's not particularly useful. Right. That's trouble with technology, guys, isn't it? It never does exactly what you want it to do. There we go. So euro dollar. 1 second. Euro dollar. Right. Okay. So on the hourlies, euro again is looking weak against the dollar. And as I said, I mean, my kind of view over the last 3 years that I've been speaking on FX Street has been that I'm a seller of the euro. Okay, there's nothing more certain in my mind that the euro the next 2 or 3 months gets back down to 1.3000. So down all the way down here. Okay, it's nothing more certain. I'll be selling euros until the day I die. Okay, so for me, it's looking for the peak. So do yourself, a favour and put some, good things on like Bollinger Bands. I mean, again, these things, work time and time again. We're hitting points of resistance up here, a 1.36208. The market's working well. I mean, look, it's always a great opportunity to go back to the basics of trading. Outside the Bollinger Bands on the low side, come back to the moving average. Outside of the Bollinger Bands on the high side, back to the moving average. So, not for me. Euro dollar today continues to weaken. I would expect it today easily get down to 1.35678 easily. Below that again, it'd probably take a lot of momentum to take it down to 1.34720. But we look on the dailies. We've kind of peaked out. So if you want to go on a bit of a short-term view, do the Fibonacci. So again, we're holding just above the 50%, okay, but the 61.8 is coming to play, so we haven't retraced 100% of the move. So really, as long as we close below 1.35678 today, or at some point this afternoon of trading, then the market's going to test lower. Okay, so that's what you want to look out for today on your hourlies, is the market to hit 1.35678. If we close below that, then the market definitely will get to the low end of the Bollinger Band. So realistically, we've got good 200 ticks or so on the downside of a potential movement today. So, but I mean, again, looking from the other side, this is on the shorter term, on the days. We're still fairly bullish. We're making consistent higher highs and higher lows. So we'll have to see how this daily candle kind of works out. But that's really what we have to do, is go into the hours and look at it that way. You keep your fib on. So basically your target's here. If it breaks and closes below, ties in with the bottom of the hourly Bollinger Band, then definitely the market's going to hit down here. So again, that's how you trade. So you're taking, a Fibonacci retracement or, something of interest, like a daily move, looking at that same information on an hourly move, and it becomes pretty clear. We've topped out at 61.8 on the hourly, so your next target on the downside is here. So if you're selling in your short, you've got 23 ticks to play with, maybe 80 ticks, 80, 90 ticks on the way down. So, that's how you trade, guys. So that's what I would say. So that was the euro dollar. So, and the euro Aussie dollar. Okay. So let's do the euro Aussie dollar. Euro Aussie dollar. So again, one that I never really trade, to be honest. So here's the euro Aussie dollar. So really, a bit of an uptrend here. Market is looking very strong. So I would say that realistically on the dailies, we've still got some room on the upside. The market looks like if it's going to continue this bull run, we'll get to 1.5480. If the market then, again, we've got some good levels, some good double tops here. So maybe the market might push up and then start to retrace back into the range here. So it's quite a steep trend here, again, if this be you very, very, rudimentary kind of trend lines, look, we're finding good support here, and we've kind of gapped. So that shows that, we're still very, very bullish. But remember, the quicker something goes up, the more aggressively it'll come back down. So realistically for me, I would see the market kind of topping out at these resistance levels here, and certainly 1.548, and then coming back down. But again, look in your monthlies. Okay, so a whole different picture when you look at your monthlies. We've got, a huge drop here in the market starting to recover. So again, do your Fibonacci. Start with the red candle. Market really for me starts low, gets to here. So if you're trading from the other side, you still believe there's strength in the market, then 154.73 for sure will be a good point of attraction. But then the 50%. So you've still got, a good way to go for the market to test the 50%. And then you start to base your opinions. So on the monthly, if we get to the 50%, yeah, and then, the market wants to hit these highs, then you've got your targets. But if it closes below the 50%, then it's going to continue the down move. So that's as simple as that. What you do is you look at that in your weeklies, look at that in your dailies, okay, and that gives you the idea. Again, look at the dailies, really. It's really kind of, quite a smooth upward curve. But, this looks to me like it could be ready to top out. Peter is head above the 38.2. But this will be the first test. So for me, if this really closes on the dailies below this level of kind of 15059, it's all down for me from there. I don't know what's going to make the euro significantly strengthen against the Aussie dollar that much for me personally. But again, I'm very, very bearish the euro. So for me, I'll be looking to sell these points, and I would expect realistically that the market's going to get back down to definitely here. I would say 1.4441 will be where I think the euro is going to be trading against the Aussie dollar. So bearish for me. And again, your key trigger point will be as soon as we close below 1.4992, I'd be getting short. I'd be getting short the euro against the Aussie dollar. Definitely. That's what I would suggest. Okay, so anything else? Why do I start from the red candle and not the top of the green one? Well, because, again, it's all down to personal preference. If you want to take the top of the green, you're taking the momentum of the top of the bullish move. So that can tie in, obviously, because you're doing a reversal Fibonacci retracement. But I do it from the top of the red candle because that's when the sentiment changes. So red is selling, so I take it from where the most of the momentum starts in the market. Because remember, you've still got buyers in green candles, people that are buying tops and people that are still bullish that move. I'm trying to get the retracement to see where the sellers will go. So I take it from the first point at which the sellers aggressively come into the market, and that's the top of the red candle. Okay, so that's just the way I do it, Nick. It's just a personal preference, but it's entirely down to you. I guess it's entirely down to you how you want to do your fibs and do your retracements. Remember, technical analysis is very personal. It's very different from different people. People like to go off the closes. People like to go off the highs and lows from the trend lines. But you've got to see what fits. Okay, you've got to see what people. You've got to see what looks best in the market. A lot of the best technical analysis is done by line of sight. It's done by putting it in yourself, and it just looks right. And that can be a combination of highs and lows. Okay, so you can see the pound against the dollar will continue to weaken down here. So I would say that our targets are definitely down here at 1.63273. Big resistance down here. So I'll be looking to buy it back. Definitely at 1.63005. Again, because we'll be trading outside the Bollinger Bands, so a quick spike and test down here. This would be a buying opportunity for me. Okay, Ramesh is just asking if we can analyse the New Zealand dollar versus the US dollar, which is going to be very similar to the Aussie dollar, but yeah, of course we can go through that. So New Zealand dollar versus US dollar. Okay, so same kind of scenario, really. The market it looks like it's topping and moving down. It's a bit of a messy monthly look, that, to be honest. There's not a great deal kind of screaming out for me, to be honest, on that one, Ramesh. But let's look on the weeklies. Yeah, weeklies look a little bit nicer. Again, very, very jerky, very jumpy chart, and that kind of stuff worries me because I don't want to be involved in a chart like that. I want to get some clear direction. It looks definitely like, we're not holding on to the top with the wick. So it looks definitely like the market wants to get down to, I would say, this looks a great level here. It wants to get down to 0.79677. So yeah, if you're looking for a short, that's definitely a big target down here. I would definitely see the market getting back to that. But on the dailies, yeah, we're certainly on a down trend channel. So again, if you're looking for rejections on the high side of the market to hit the lows, and again, just put your Bollinger Bands on. I mean, these are things you should have on your charts at all times, guys. Your Bollinger Bands are essential for trading. Look, rejection, wicks, come back in. Where do we hit? Within 3 days, we've hit the moving average. So get your idea on the dailies. Go back to your hourlies, and we're kind of ranging now, really. So I'd say your trigger point is, Ramesh, that we need to be closing below 0.81909. And then you've got some good targets down here. The market then breaks. It will definitely want to close this gap here. And if it does that, we're probably going to test down to 0.81052. Okay? So we've just got 5 minutes before put the fibs on the weeklies. Okay? All right. Put the fib on the weeklies. Right. Well, let's start on the monthly. See if there's a fib opportunity. Well, the fib opportunity again is interesting. You could either do a fib from here to here, because that's the up move. Again, you've got to think what's going to give you the best results. Or, for me, you could do the fib as being from here to here, because this is the start, of where we find this new level of support. Okay, so you take all this information out of the chart. So, weekly. Okay, well, let's do the same kind of scenario then. So, weekly would start here, okay? This is the start of the selling, right? So from here to our low point here, well, surprise, surprise, what's the market done? It's hit the 50%, okay, and closed at 50%, and we've bounced back up. So realistically, we need to close above the 61.8 for the market to retrace 100%. So what you're looking for really is to build a position if you're looking to go short, because that's really what we're saying, that it looks like the New Zealand dollar is going to weaken against the US dollar. Which sounds right, because the dollar's going to appreciate against most things with quantitative easing. So really, you're building your position here, okay? If we close in this hourly, well, that's weekly, okay? So we're closing that weekly anyway, below the 61.8, your 50% your target. So look at that on the dailies, okay? Looking better. It's looking like the dailies could certainly, using the moving average as resistance, the dailies could certainly come back down. And on the hourlies, even better. Okay, so the market has broke out the Bollinger Bands, completely rejected the 61.8. Okay, we're kind of teetering on the moving average on the hourly. So again, the trigger point is 0.81 here. Close below that, the market then gets to these levels here and then back down to the 50%. So again, rejection of trying to get 100% of the move back. Last ditch attempt, big wick, close back inside the Bollinger Band. So we're looking for a break on the low side of the charts. So really you're selling all these levels here, looking to buy back 0.81195. Okay, so that's technical. Looks bearish to me. Everything's going to appreciate dollar-wise against the currency when quantitative easing finally tapered. So my short term is really sell all currencies. That's what it's looking at. It's like sell everything you can. And I'd start with the euro for me, because that's the one that's going to hit the hardest. Okay. So we continue to see the pound weaken against the dollar. Okay, so that's fine. We've got this double bottom here, but again, look at the wicks. We've still got some bias of the pound in the market, because every time we do get these aggressive moves, these are hourly candles. Remember, look where they actually close. Okay, so it's not quite as clear cut. If you are staying short, I'd get your profit out quick. Okay. So one final one. We've got the DAX. Okay, well the DAX has been selling off, as we know. We'll just do a quick one on the DAX, and we've got a couple of minutes before the Bank of England. Nothing's really expected, so I'm not too worried about it, but we do want to kind of listen to what's said on the squawk, because we do. Okay, Bollinger Bands. So, look, these things are simple until they're not simple. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 green buying weeks. Market finds a high, starts to reject it, ties in with the Bollinger Band. So where realistically can we get back down to? Yeah, another, 340 7 ticks down here. So we've got market, for me, for the DAX, is definitely going to try and test 8778. That's the key target. Okay, it's as simple as that. That's where the DAX wants to get back to. Moving average is a key daily and weekly level of support resistance. So that's where the DAX is going. Okay, as simple as that. On the dailies, again, all kind of works out. We'd have to break the low of the Bollinger Band. So in your hourlies, what we're looking for really is the moving average, if it has, to be acting as resistance. So really, market gets to here, and that's a big sell for me. And you've got all this room to play with, for the bottom. So realistically, if the market does start to spike above the moving average, you'd be selling these levels here. Okay, so we're just going through the unchanged of the Bank of England, so nothing really as a surprise. Now let me just listen to any comments, see if anything worth of note. So nothing to change in the Bank of England, no surprise there. So realistically, what you're looking for is the market to pip up, and you're selling the highs. Okay, so when the market's moving such aggressively in a downward motion like this, what you're doing is selling highs. So everything here is a good selling point, a good point of resistance. So 9196, 9256, and really for me, I'd be looking for the DAX to hit 9166.1, and then definitely, we've got a good 1,000 ticks or so on the downside for me. Okay, so really that's some good, again, that's some good technical analysis. This is what these sessions were all about, going through, tying up your fundamentals, tying up with your technicals, and seeing how the market's going to behave. So really, realistically, what's happened, for the Bank of England? Well, the fact that it's unchanged has sent, again, a little bit of a bid back into the pound against the dollar, but realistically, we're just hitting levels of support anyway, because we're outside the Bollinger Bands. That's a good excuse for people to buy. The trend still looks down, as I've said, for the pound against the dollar. So I'd expect, the market does shoot up to these levels with any kind of speed. I just sell them, okay? But my main kind of message, I would say, realistically, is stay away from the pound, stay away from cable. It's just too close. Economically, it's just too close. From talking from a fundamental standpoint, it's just too difficult for me to see a better than 50-50 edge. So you need to be looking at, remember when you're trading currencies, you're just trading strength of country against strength of country. So will the European Union be stronger in 2 years' time than the US? No, is my opinion. So I'm selling euros and buying dollars. So think about New Zealand, Australia, think about the Swiss, think about all the other currencies and countries that could be under or overperforming, and that's how you trade the currencies. Okay, so what to do on the pound versus the US dollar? Well, firstly, stay out, or secondly, I'd be selling it. Okay, so what I'm looking for now is that nothing new has come into the market. Okay, Bank of England keeping rates unchanged, no key comments, nothing from Carney. Okay, so what I'm expecting is a bit of relief buying, so we get back to the moving average, or 1638, sorry, 1.63687, and I'd sell it, because it looks like to me that it wants to move down, okay, because we've seen the red candles on the hourlies, so I'd just be selling any highs. So again, that's what I'd be doing. I'd be generally selling the pound against the dollar right now, because of all the things I've said. The dollar's going to massively appreciate over the next kind of couple of weeks and months. So, and that, brings the pound into that same category. But as I said, I'd be less likely to get involved in cable, because it's a little bit more difficult. Okay? Alright. Okay, guys. Anything else? Anything else we'd like to look at? Anything else we'd like to kind of go through? Anything else at all? I mean, we've kind of gone through, like I said, a bit of a non-event, I'm afraid, for the Bank of England minutes. These things, sometimes, we have great opportunities, sometimes we don't. But, that's just the way trading goes. You can't expect to make money all the time, unfortunately. So has anyone got any other thoughts? Right, Ramesh is just coming through. Mr. C, yes, Euro sell all levels. Well, I mean, you can't just start selling all levels. Tie it in with your Bollinger Band, tied in with your daily and, hourly RSI. Look for the market to be overbought. So when the RSI gets above 70 in the euro, look for selling opportunities. So don't just take it from me. I mean, that's my view. That Europe although all the experts say it's coming out of recession, I just don't see it. I just don't see it. And I just don't think Mario Draghi has been any kind of, he's not been a worthy adversary to Jean-Claude Trichet. He just hasn't done anything. He's just Fed followed. He's talked a load of nonsense about, negative deposit rates. He's just been a waste of time for me. All he's done is follow the Fed and follow the Fed too late. So it wasn't for Germany, the Eurozone finished. It's as simple as that. So I just don't have confidence in Mario Draghi. I don't have confidence in the ECB politically, fundamentally. I just don't have any faith in them at all. So for that reason, I would look to sell the euro and buy other currencies against it. I mean, that's just my fundamental view. So yes, what you look for is overextended high points in the euro and sell them down. Okay, so what else have we got? Someone else just saying about the Japanese yen up nearly 5%, then retreating. Okay. Yeah, I mean, Durov, the pound fell slightly to a bit pre the announcement, but then it kind of rebounded. But it's a bit of a non-event, really. You've missed nothing, to be honest. Yeah, let's go through some of the Asian markets, because people love to talk about the dollar and the Japanese yen, and it is quite a unique situation with obviously Japan holding more dollars than the rest of the civilized world put together, pretty much. So I don't know. I mean, I like to look at it, and I like to talk about it, but I don't like to trade it. Okay, my least favorite markets are the Asian markets, so I stay well away. So on the monthlies, what we're looking for is we've seen huge kind of big sweeping down moves. So realistically, where are we trading? If you start to do a Fibonacci retracement on the monthlies, here is arguably where the down move starts. So we put our Fibonacci into play, and we're holding above the 50%. So realistically, what we're looking for the market to do is break above 105. Okay, once we break above 105 and close above it, then we're going to make new highs. So for that instance, this is the key decision point here. If we close above 105 on the daily, weekly, monthly charts, then that's it. The dollar rockets. It rockets against the Japanese yen. Again, if we start to reject that 60, we'll come back to the 50 and then break back down. So you have to understand, I mean, it's all about competitive devaluation, isn't it? Japan relies on having a relatively low, base currency in order to make its exports attractive. So what's going to happen with quantitative easing? The dollar's going to strengthen. Will Japan intervene? Will they start, selling dollars in order to counterbalance that? That's why it's so difficult to trade the dollar versus Japanese yen, because you just don't know. 4 trillion, was it 4 or 5 trillion dollars? The Japan holds in reserves. So if it wants to smash the currency markets, it can smash it. Okay, so realistically for me, start looking on the dailies. It looks like we're peaking out. So we're peaking out. We've not got anywhere near the 61.8. Then realistically, we're coming back to the moving average. We're coming back to 50%. So that kind of, I don't know. It's a difficult one for me. This is my least favorite currency pair to trade. So what would I say? To be honest, I could see certainly the market getting back down to the 100 mark. But then I don't know when intervention's going to come in. I don't know what the Japanese government are going to do, or the Japanese central bank are going to do. So my advice would be stay out. But what I would be doing is potentially letting it sell off and buying dips. I wouldn't want to sell it personally, but I'd certainly buying dips. So if we saw any big red daily candles around the 50%, then I'd be buying, yeah. So I'd definitely be buying some dollar into the yen down at 99.530. But I wouldn't sell it. So, sorry, a bit of a cop out, I guess, but no, that's just, I don't see any value in selling it personally, but I find some value in buying it from the lows. That's what I'd say. Ramesh, what's your take on the CAC 40? Having to big those candles. The CAC's something I never really look at. I'll be perfectly honest. I trade the DAX and the FTSE and the S&P, but the CAC for me, it just isn't. No, it's not. Where's the CAC now? Sorry, I don't even know what it is because I don't trade it enough. CAC is that FCE. Okay, 1 second. We've basically taken out 1, 2, 3, 4, 5, 6, 6 weeks worth of gains in 1 week. That's just what happened. So for me, realistically, the CAC is going to do what everything else does. It's going to hit a level of support, it's going to bounce back. I would say the up move really for the CAC starts here to here. So realistically, the CAC gets down to 3920 before it bounces back. So definitely 4,000 will be a level of where people start to buy the market back. But again, as I said, when you see these big aggressive moves, don't buy the bottoms, buy the breaks. So realistically, in the next kind of 2 weeks, maybe the next kind of month, the market can certainly move the same distance as this candle on the way down as well, and that time to 50%. So yeah, I think while there's profit taking and while there's going to be this threat of quantitative easing being tapered, that's just going to smash all the markets, okay, all indices. So regardless of either European, UK or US, once QE is officially said to be tapered, then all markets it's goodbye. It's simple as that. Okay, guys. Well, great interaction there. I think that's been one of the best interactions we've had. You're starting to really kind of get on board and get involved, and that's what we're here for. Really to speak about what we're thinking, to get my opinion, to get your opinion, and to have that banter. Unfortunately, there was nothing from the Bank of England today to make us do anything in the pound versus the dollar. It's continued to strengthen slightly, but as I said, I'll be selling it. So do a 50% retracement from the red candle to the low here. Once we're at 50%, I'd sell it. So that's what I'll leave you with, okay? I think that the pound strengthens. I don't know if it'll get to 50%, but look for it to get to 38.2. If it gets to 50%, sell it, and then we definitely test in the next kind of, maybe next week, down to 163.005. Okay, so again, dollar's going to continue to strengthen. It's all about non-farm payroll tomorrow. We see a much better than expected non-farm payroll. Doesn't matter how high any of the indices go, it's a massive sell. Okay, because that means quantitative easing is coming maybe January, March, and that's goodbye. That's goodbye for the short-term buyers, and it's hello to the short-term shorts to get some quick money. All right, guys. Well, listen, thanks to Maud, Vicky, the guys at FX Street. It's been an absolute pleasure. Find me on Twitter, @Ruffley. That's the best way to find me, and it's been a pleasure. All right, guys. Have a great afternoon, and I'll speak to you all very, very soon.